Hi, I'm Lary Wolf. This is Stuart Gross. We're partners at the law firm of Roberts and Holland, and we've been talking about different aspects of the new tax law. The topic we're going to cover now relates to net operating losses and the limitation on business losses. And this one has actually shocked a lot of real estate owners who are not used to paying tax, and we'll see why this is an important change, potentially. With respect to net operating losses, the old law was that if you had a net operating loss, that means your expenses were greater than your revenues from your business. You could use that loss in other years to offset up to 100% of your taxable income. And the rule was you could carry back that loss 2 years or carry it over 20 years. So if you had a big loss in year 4, you could carry it back to years 2 and 3. And if you still hadn't used it all up, you could carry it over for 20 years. The new law changes the ability to use net operating losses so that you can only offset 80% of your taxable income. And there are no carrybacks. You can only carry forward your net operating loss, but the 20-year limitation has been eliminated, and you can carry over your losses forever until they're fully used up.
So if I have a $100 loss in year 1 now, and then $100 of income in year 2, I don't simply offset the income in year 2 with the loss in year 1 to get a net tax liability of 0.
Correct. Under the old law, that's exactly what would have happened. Under the new law, you can only you offset $80 of your income, and so you'd have $20 of taxable income in the second year, and you would also have a carryover of the unused portion of your net operating loss. You could carry that forward.
That doesn't seem very fair to me.
It's just timing. It's just timing. So it's fair.
For real estate people, before Larry starts to talk about limitation on business losses, there are special rules for real estate people in connection with the passive loss rules. And there are concepts of qualified real estate professional. And so before Larry starts talking about business losses, a suspended passive loss for someone who is subject to the passive loss rules is not subject to this 80% limitation. That is, when someone has a suspended passive loss, that suspended loss is treated as incurred in the next year and is therefore able to be used to the tune of 100%. So that's an example now where someone might conceivably be better off not being a real estate professional, having a suspended passive loss which is able to offset 100% of his income in the next year rather than simply 80%. By the way, Larry, was there a transitional rule with respect to the net operating loss?
With respect to net operating losses, if you had a net operating loss that was incurred before 2018, you can carry that over, so from 2017 going forward, and you can still use that to offset 100% of your taxable income. You can't carry it, like you already took care of the carryback, so carrying forward is fine, and you can still, with respect to old net operating losses, use that to offset 100% of your taxable income. Okay, so now comes what may be a very large change, although some people are saying it's a temporary big change. And I'll explain what we mean by that. And this relates to the disallowance of excess business losses. Business losses have been a great thing. You were able to offset any kind of income, your wage income, your investment income. There were no limitations on what you could do with a business loss. So if I have a loss from my active business of 100, I could use that to offset my W-2 wages. I could use it to offset my bond portfolio income, stock dividends. It was,
Well, that sounds reasonable to me. If I incur a loss, why shouldn't I be able to use the loss to offset my wage income or my interest and dividend income?
did you use the word reasonable? Yes, that did sound reasonable. The new law has changed this so that a non-corporate taxpayer, Stuart, for example, is not allowed a deduction for his excess business losses. And excess business losses is defined as the excess of deductions over your aggregate gross income plus $250,000 if you're an individual, or $500,000 if you are filing a joint return. So if you have a business loss, you can still use it against $250,000 of income. But if you have a huge portfolio of investments, you cannot use it against that type of income. This is a major potential shift. So if you do have an excess business loss, what it says is, the law says that it becomes a net operating loss, or it's treated as a net operating loss. So does that mean you just in the year that you incur it, you can't use it, but in future years, if it's a net operating loss, you're able to be under the net operating loss rules, which allow you to offset 80% of your income, or under the excess business loss rules, which say you can't offset investment kinds of income. We're going to need some guidance on this point.
So the favorable interpretation would mean that the excess business loss could not be used in the year it was incurred, but you would be able to use it against your interest and dividend income in the following year. And the unfavorable interpretation is that you would never be able to use the excess business loss against the interest and dividends. I know from the scoring, the revenue estimate that was in the new legislation, I know what Congress thinks the answer is. Congress thought that this provision was going to raise, I don't remember the exact number, but it was in the hundreds of billions of dollars. And that would not be the case if it was simply a one-year deferral.
So again, this is another one of those areas where we're going to need guidance from the Internal Revenue Service.